Hello, everybody, and welcome to the Coach's Playbook. We had a whole thing planned out today with some piece of great advice, I'm sure, but we're throwing it all out.
Going with the audible.
Because we got a little news this morning, mainly that the Fed did a little emergency cut of 50 basis points. So we thought we'd talk a little bit about that and also field any questions you might have once you come in. I'm trying to figure out, I feel like one of those NFL coaches on the sideline. I've never held one of these Surface Pros before.
You can turn it the other way too if it really drives you nuts.
Oh, like this?
There you go.
All right, that's fun. So anyway, to kick things off, Dan, you wrote an email that we'll be sending out with some of your thoughts on this cut. So maybe just to get an overview.
Absolutely. So while obviously this morning we saw a little reaction, Fed comes out after the biggest positive points gain in the history of the stock market. We got a special guest here today.
Sarge will be with us.
But the biggest points gain in stock market history yesterday, Fed comes in this morning, cuts the Fed interest rates by 50 basis points. That's 25 more than we've been seeing for a while. The last time we saw a 50 basis point cut was in 2008. And to throw another thing into the mix, the last time we saw a surprise cut was in 2008. So this one came as a little bit of a shocker. Mm-hmm. I was surprised. What do you guys think?
I was surprised too. I mean, just surprised by the I don't really look into the rates all that much. You pay attention to that. I was surprised by the spike in the equities and then, the fall off afterwards. Just more volatile price action here.
Well, obviously, there's more to it than we know. I mean, it's 2 weeks till the next Fed meeting, so this is something that they felt as though needed to be done in a timely fashion and aggressively with the 50 basis point change. Right?
It was very bold. I mean, I could have seen it Sunday. Then they come out and said, "Look, we had a rough week last week. We're going to be cutting rates this week." After that, Dow was up 1275 and a 2,000 point move from the lows yesterday.
You almost said cut bait.
Cut bait, yeah, no kidding.
So we'll take this to say hello to everyone. I think that Nick wants to make the guest a host. I think he's talking about Sarge. So
we've already put him to sleep.
Yeah, we're going to have Sarge talk about the bond market in about 10 minutes.
Yield curves coming up next
right?
on Sarge's Playbook.
So what I thought was super surprising, to piggyback off of what Dan said, is I just don't get the timing. And some of it is, I don't know if you guys don't know, I don't know what the exact mechanisms are, the checklist the Fed goes through to do something like this, who they have to meet with, who they need permission from, but it seems like maybe they decided it and they're going to do it regardless of what the market does, because the Fed has said that they don't want to be completely influenced by the markets or politics. They try and remain independent. So once they decided, maybe they were going for it, but I'm right with you where I don't quite understand. The markets came back. We don't have much rates left to work with if there is a recession. So it seems like an interesting decision to cut 50 now.
That's a great point.
Right. I think it's just kind of going to, President Trump's talked a lot about how he wants to see negative rates, do some adjustment with the U.S. debt to try and work with that a little bit. This just kind of set the stage for possibility of seeing those negative rates coming around the corner.
So why don't we talk just a little bit, just to go to the macro level. There is some concern over whether this is the right tool to, obviously, you guys have been watching the markets. It's been rough out there recently, and that's a real macroeconomic supply shock going on, and we don't know how it's going to shake out. Does anyone want to field why rate cuts are an interesting way to attack that?
Yeah, I'll dive in first. Obviously, the Fed, they don't have a lot of levers when it comes to what's going on with coronavirus right now. Obviously, the Fed is not going to cure coronavirus by any means, but I think this is their way of getting involved. We have seen this Fed willing to adjust rates pretty consistently. We've seen a lot of movement over the last couple of years. I think, yes, they're independent of everything else, but I think, President Trump has put a lot of pressure on Jerome Powell to continue to cut these rates. And so I think that pressure on top of last week's sell-off, I think that was just kind of that inciting factor to start cutting these rates. I think that's part of it.
Well, and I think there's also the fact that this is going to be the new normal for a while. This coronavirus isn't just going to walk away on its own. It's going to be something that's going to be an issue for a long period of time. So just allowing cheaper money out there for the companies that are going to be suffering from supply chain issues, from some of them even unable to operate in certain areas of the world. I think it's going to be. It was a preemptive move to just make that liquidity more available to the companies that are going to really be taking the brunt of this. And again, I think it was a little bit preemptive, but this isn't going to go away for a while. This is going to be around for some time.
Hoag, you hit what I was trying to get at there. The reason why I am confused, and I like the macro stuff, is that the problem here, I think we can all agree, is not that money isn't cheap enough, right? It's not as if we have a crisis where the main problem is a lack of liquidity. Money was already cheap. Our problem is how this virus is going to affect supply chains, how it's going to affect the workforce. It's a supply-side shock, and I'm not sure what having money be a little bit cheaper is going to do about that.
I would absolutely agree. I think we saw it last week. Everyone's saying economy's doing good. Markets are looking fine. We can't be too concerned just yet. U.S. economy, all sectors are pretty equivalent. Nothing was on a bubble. No bubble popped. People were just concerned and saw the fear, and they started pulling some money out, trying to wait and see what actually happens. So for the Fed to make money cheaper doesn't really.
And it comes back right to, I think, the fact that there's maybe some things that we don't know about yet.
That is a good pivot, because I don't think that, for instance, Pfizer was sitting around being like, man, we really wanted to make this vaccine in our capital allocation, but rates were just a little too expensive to borrow. So we'll just ride it out and wait for Jerome Powell. I think you hit it on the head. The Dow rallied 1,200 points, and now we're left thinking, well, we know that. Do you guys know something that we don't?
Right.
And that's where you could get some of this panic, because it did obviously just knee-jerk, stocks rallied right away, big after this cut announcement, but then they've come off. I haven't been looking super close at the minute-to-minute markets today. There's a quote board up, but I believe we retraced.
Yeah, down 0.5% now in the S&Ps, it looks like.
Yeah. And almost 0.7% in the Dow. Dow's off by about 160 right now in the futures.
Yeah, that's just crazy.
So Darwin Davis asks, what's the best way to prepare to trade this type of market? Any advice? I want to pass my tests. Well, I mean, there's some general advice that, I mean, maybe it's not what you want to hear, but it's obviously, you got to size down, widen things down. Don't try and catch falling knives. Like, if things are really moving, and you guys can tell me what you have to think about it, but you got to be going with the moves here. You can't be picking bottoms.
Well, we did talk about how to approach these markets last week in our Coach's Playbook segment. It's not every market environment's for everybody. You have newer traders, professional traders, people. It's a good time to sit on the sidelines. If you don't know how to execute trades in this environment, maybe you best not. It's a good time to watch what's going on, see what's happening. There's a lot of risk out there. It's a good time to sit on your hands. Obviously, trade small, like Jack said. If you are participating, you maybe want to look at a little bit of a higher time frame too.
Yeah, you've got to be prepared for some risk. I think right now, we don't know what's going to happen. There's no, we knew on the break last week, eventually this thing's going to find a bottom. Eventually we're going to find some support somewhere. Right now we don't really know. In theory, a rate cut should make money available. You see equity markets push to the upside. Right now, I think the bigger question is this going to do the polar opposite? Is this going to cause more fear and accelerate that downside move and take away all the gains we had yesterday?
Very good point.
Well, and if you do choose to engage in these markets, through my experience, it's very easy to get kind of roped into anything flashy. You're trying to catch every move. It's seductive. There's a lot of opportunity. There's also a lot of risk. The only way I've been able to maintain stability during these periods of time is to try and just remain extremely patient. wait for the market to come to a level that makes sense to you. Don't try and create opportunities. Let the opportunities come to you. If you recognize them and you can manage the risk on them, I'm all for taking a trade in this. But again, it's few and far between where you're going to find the levels where it's kind of less risk, right? You're looking for extremes. You're looking for particular longer term levels with which to trade on, and you have to be patient to wait for those. You really just have to sit back, watch the show. The market gives you an opportunity. Something makes sense to you. Go ahead and take it if you can manage the risk. But don't try and knock it out of the park here. Don't size up. Don't think that you're going to pick the bottom. When a market is directional, the worst thing you can do is try and step in front of it without some sort of structure. So apparently, I have now again put the dog to sleep.
Yeah. Well, you can't fall in love with the trade that you're in either. I know a lot. We talk about taking trades with asymmetric rewards and adding to winners. In a market like this, you have to spread everything out and even be careful about adding to winners. If it's not often that you see markets where, say, the S&P is ripping back and forth 100 points, and that happens multiple times a day now, it seems like. So even if you have a strong bias to like the downside, you could have got your face ripped off yesterday.
I like what you said about not getting married to any one position too. MP and I were just looking at the S&Ps, and we put a short on, and then we added another short. We had just a 2 lot, just some 1 lots. It's the large P&L swings in these markets. And we had 40 points in the trade. We thought maybe it could go a little bit lower, and we had our stops in, and we ended up getting stopped out after having 40 points in it. We didn't cover one of them. We thought there was a little more room, and we managed our risk and our reward. We were looking for more. We didn't get it, and we didn't get hurt on the trade at all. But it just goes to show, if you've got some money in a trade, especially if you have more than one contract on, it's always good to peel one off. We were looking for more again, so we kind of, we obviously would have liked to have made money on the trade. We didn't, but we were looking for more. In that example, I guess, we didn't really want to peel one off because we thought more was coming.
Yeah, level 2 is using buy stops with managed risk.
Smart.
Hey, as long as you're managing risk, that's the way to do it.
Yeah.
And also, my biggest problem as a trader is I'm someone that falls into that FOMO attitude a lot. And it's tough to look at markets like this and not feel like all I can see when, like last week, if the S&P's down 160 handles, I'm like, man, what if I had just gone in there and sold it? But you can't think that way.
No.
And John mentioned the seduction of these swings too. In hindsight, you can look at a chart and say, oh, if I only sold it there, I'd be here right now. But that's in hindsight. One other thing I wanted to mention as far as how to operate in these environments, most people have a strategy or a couple strategies, and you probably have them fine-tuned to a market state that's nothing like this right now.
Right.
This is, something that came out of nowhere. It's moving fast. Risk is high. So as far as trading, operating in this market environment, if your strategy doesn't fit this environment, you don't have a strategy, and when you're, without a strategy, you shouldn't be taking risk.
Right. I was just looking at S&Ps a little bit ago when they were working their way back towards settlement, and I was thinking, okay, maybe here's an opportunity. Maybe you're looking for a little bit of a long trade. Settlement's at 65. I was trying to think, okay, if I did buy at 65, where's my stop? The next place I was looking for a technical stop was down at 50. That's 15 handles of risk. And it doesn't look like much when you look at the chart, but it's 15 handles in the grand scheme of things. I don't need to be risking that in this volatile environment. I have to just ignore that opportunity.
Yeah, $750 a contract.
It's huge.
And it looks small.
It looks
on the
tiny.
chart.
Well, here's what Tana, hey Tana, what's up? Said she'd only recently started trading the ES, and this market's too tough for me. I moved back to NG where I feel more comfortable. You do you. And
Very good idea.
Smart.
Let me
And
tell
that's
you
a volatile
something.
market right now too.
There's
That thing's making
no one out there who's saying, this ES market is easy right now.
Cakewalk, yeah.
And also,
Right.
this is not the norm. At some point, you can go back and check that out.
Kind of going back to what Mick was saying is, if your strategy is paying you in a certain type of market state, it's a different market state right now, right? So
Every day.
we say basically, the market, once you have all the right answers, the market's going to change the questions.
Right.
And that's exactly what we've got going on here. So we need to adjust or wait. One of the two.
Right? It's just a wild time right
Is
now.
the juice worth the squeeze?
There
Is
you
what
go.
Justin says.
There you go.
That's true. And yeah, Michael, I'm right with you with the greed and FOMO being the biggest triggers. It's hard because, you look at these markets and there's theoretically a lot of stuff you could be doing, and it's hard to, it's a embarrassment of riches that'll.
Absolutely. You got to have a lot of capital right now. You have to be willing and comfortable to take a lot of heat in these markets. And for a standard retail day trader, that's really tough.
Yeah, before we walked in here, John came by my desk and I said, "Geez, you need $100,000 in your account to trade a one lot right now."
You really do. It's so insane right now. And then you have to have that. You got to have that mental capacity to watch it go against you $1,000 and be okay with that. That's
Yeah.
tough.
Where do you go from? How do you get from stubborn to intestinal fortitude? Is what really we're talking about here, right?
Right?
Yeah.
Yeah, it's hard.
Where's the line between guts and stubbornness?
Absolutely.
Yeah, I know that we've talked a little bit about this in my non-leveraged accounts. I've been buying this just because at like every level that goes lower, fine, I'll put more on. Anything leveraged here, you gotta really watch.
You do.
We used to watch people do that in the pit in the S&Ps, and they'd buy it at 8, and now it's 6 offer. They buy a few more at 6. Now it's 4 offer, and they buy a few more at
The price
6.
keeps
And
getting
JD
better.
says if I loved it at 6,
Yeah.
I really love it at 4, and if I
Absolutely.
really love it at 4, I'm not
You
gonna let
would
these
say-
2s go.
He'd say he's putting more on. He's got the moron trade going.
I call it the Pelzer power fade.
There you go.
And that is something you should never do
No.
with a leveraged
With
position.
leveraged
Absolutely
products.
not.
Absolutely
This is
not.
something I'm not going to touch. If I'm lucky enough to make it to 65 years old, then I can go back and reevaluate my entry level.
And by then it'll all be great trade location,
Right?
right?
Oh man, I wish I had bought more down there
Right.
too.
Either that or we'll be like using abacus and sticks, and we'll see.
Absolutely. Just a wild day. I was walking the dog when rate cuts came out, and my phone starts going off. I started sprinting back here. I'm like, oh my God, they cut rates, they cut rates, they cut rates. And I'm thinking to myself, I go, why? I was just in total shock by the whole thing. But man, it's created for some volatility.
Level 2 brings up a good point. Also, people out there in brokerage accounts, or I think we offer something involving them too. But this might be a good time to look at those micro contracts.
I'll drop a link in the comment section
Yeah,
once
the
we're done.
swing trading combine.
Yeah, or like however you want to trade them. I don't want to go full, marketing it anyway. But it's definitely worth it to, if things are moving 10 times as much, maybe trade something.
It's that way to put your toe in the water and safely participate if you choose to.
For sure. And also, today, down in the description, I dropped the link to Hoag's weekly group coaching class every Wednesday at 1 p.m. Central Time. I dropped that link in there. I would say join that this week, hear what he has to say. He's going to be kind of diving into these markets a little bit more in depth than we do here or even on the forecast.
And email in questions too.
Absolutely. I dropped that link, so it is in the description. It's right up top there. Make sure you check it out.
So level 2 says he wishes they were available when he started. Well, there's something that'll probably keep on rolling out every 20 years as the price of the S&P goes up, because the E-mini was originally like
The same concept.
the old same concept.
Right.
I mean, what's a full S&P future at now?
Well, it's $250 a handle.
Yep.
$250 a handle times
So it's
3,000.
$25 a tick, and then it trades in dimes, not quarters. So there's 10 ticks per handle, $25 a tick.
There
Keep
you
your
go.
eyes peeled in 2035 for the
Yeah.
nano contract.
Right?
Everything else.
Awesome.
So kind of to bring this full circle and kind of give a future facing thing, what are sort of like the catalysts that you guys are looking for now? So we had this rate cut, 50 basis points, all right? This is the kind of the opening volley in this coronavirus, I think this is all just beginning. We're gonna have a lot of volatility for a while.
Yeah.
That's
Yeah.
probably just gonna transition into election volatility and everything else.
It's going to be a wild year.
Yeah, this is 2020 is gonna be one for the
Boomer bust.
boomer bust, baby. So what are some things that you're looking for next that'll kind of give you not necessarily, we don't give directions necessarily, but kind of what the flavor is going to be of your trade going forward.
I'm first watching unemployment on Friday.
Yeah.
Oh, geez, I forgot about that.
That's pretty close, right?
That's
Right?
going to be.
Yep.
I'm going to be out of town. I'll be on a snowmobile trip, but I can tell you this much: I'll be sitting there watching that number come out.
What I'll be looking at is anything I can find in the charts. When you look at corrections in the past, there aren't too many that are kind of V bottoms. A year ago, last December, that one will make me a liar. That was definitely a V
I was
bottom.
going to say that was a perfect V.
Absolutely. But I don't think that this issue is going to go away for quite some time. I think we're eventually going to settle into an area of consolidation, and a pretty wide area of consolidation at that. I think the volatility is going to be part of that consolidation, and as these things kind of resolve themselves, or we get them resolved, that consolidation will probably kind of close in on itself, and eventually it'll break out of that consolidation. So I don't know how long or wide that area of consolidation, or if it has even started. But I'm going to look for this one not to be necessarily a V bottom. I think this is going to be around for a while. I think there's going to be a lot of digestion in the markets that kind of continue as this coronavirus and the election and everything kind of plays out before we're going to settle back into an upside grind, which, back in '87, we thought we'd never see those highs again.
Right.
Yeah, well, guess what? We were wrong.
Yeah, I think I'll use mine to pivot into what's being asked here about thoughts on healthcare stocks for election trading.
Kick that one to Mick. He's just talking about that one pretty good.
Yeah, I'll let you go first, Mick. You were doing some healthcare.
Yeah. Just long-term portfolio adjustments, and some of those healthcare stocks really got whacked over the last couple weeks. So if you're on a higher time frame, I scooped a little bit up yesterday.
I'll use my few minutes on this to say that you might want to look at those in the short term, because I think, and now we go into opinion style.
Yeah.
The Democratic Party has consolidated very rapidly around Joe Biden. It seems to be their preference over Bernie Sanders, and I think there's two huge catalysts going on at once in the healthcare sector. One involving the election, one involving a possible global pandemic. The election one, I think, is becoming less so. Today is Super Tuesday in the United States. 1/3 of the delegates for the Democratic nomination will be given out today based on the states that go, including California, Texas, and American Samoa. American Samoa is probably not that important for this. No offense to American Samoa, but if it's a big win for Biden and things start coalescing, then I think it's going to change sort of the outlook going forward, because obviously whether you love or hate Bernie Sanders, that's what's driving a lot of the election stuff as far as healthcare. So that's my 2 cents. I see Joe Biden coming out of this.
Yeah, for sure.
Dan, what are you looking for in the next week or so?
Like I said, unemployment, that's going to be a telltale sign for me. I'm going to be watching that one closely. I'm going to be really patient. Everything right now is, my wallet's not big enough for some of these moves. I don't need to put myself at too much risk, so I'm going to be really patient.
My friend.
And
Big stretch,
Sarge making a final appearance before we shut down.
Well, what did he just tell you?
He said, my show's up next.
Oh, okay.
That's my thought right now. I'm going to be really, really patient. This is stuff I'm not prepared to be trading 150 point swings in the S&P. I don't have that kind of risk. I don't want to take too much risk. Watching the Dow move 1,000 points like it's nothing, that's frightening. That is frightening to be involved in, because if you can get on the wrong side of that, you never know what can happen. I'm sure a lot of people had limit orders put in for stops here today and just got wiped out, lost $3,000 easy on a one lot. I don't like seeing that type of stuff.
I think over the next few weeks, I want to do a little investigating on, the rate cut, coronavirus. I'm a little skeptical on, the impact to these markets. I'm no medical expert.
I know. Mick's getting on a plane to China.
I'm no, super economist or anything like that, but I'm a little curious, and I think it's time to maybe do some investigative work as opposed to execute trades and stuff like that. So I'm just going to be doing my reading.
For sure.
Intellectual curiosity, it's a great thing. Dan, do we have a quote today?
We do. I'm not going to say it in his voice because I just can't hit it real well. I know Jack's probably better than I am. Expect the unexpected in the kingdom of madness by Randy Savage.
That's great. From a WWE wrestler. I like that. That's very Shakespearean sounding.
Can we hear it in his voice, your interpretation of that, really quickly before we sign off?
Expect the unexpected in the kingdom of madness.
When you enter the kingdom of madness. That's more Jesse Ventura. But I live the humor, y'all. All right. Well, with that, I mean, it's going to be, what can we say? A lot more uncertainty coming forward. Stay safe. Wash your hands. I'm going to the Bahamas next week after Coach's Playbook, though, so I'm kind of hoping I get quarantined. So I can just
Be
chill
stuck down there.
Right.
I'm just gonna wear a Panama hat and just never come back. Yeah.
Panama Jack.
Panama
There we
Jack.
go.
So everyone out there, thanks so much for tuning in. We'll be back next week. Tuesday is our new time for this at
Absolutely.
11:30. Stay safe in general. Stay safe with your trading. Monitor your risk. Try and find some opportunities if you can. But in the meantime, have a great week, guys, and we will see you later.
Tuesday.
All right, Hoag.
Trade well.